So you're curious about trading, but maybe you've looked at a chart and just felt lost. Like you're standing at the base of this giant mountain with no map. Well, you're in exactly the right place. Today, we're going to draw that map together step by step. Let's dive in.
Yeah, I get it. It's a super common feeling. You see all these charts and hear all the jargon, leverage, shorts, pips, and your brain just kind of shuts down. It seems impossible. But here's the thing, it really doesn't have to be that complicated. This is your roadmap, and it's designed to take you from totally confused to feeling confident.
All right, so the very first turn we need to take on our roadmap isn't about what to trade, but how you want to trade. This is all about finding a style that just clicks with your personality, your schedule, your actual life. Okay, so two of the most popular styles you'll hear about are day trading and swing trading. On the one hand, you've got the fast-paced, intense world of day trading. On the other, the more patient approach of swing trading. And honestly, the biggest difference really just comes down to one simple thing: how long you hold on to your trades. So let's break down what this actually means for you. A day trader? They are glued to the screen making quick decisions, in and out of trades, and they close everything before the day is over. It's high energy for sure. A swing trader, though, has a lot more breathing room. They can set up a trade and just check in on it periodically. The flip side, they have to be cool with holding that trade overnight or even over a weekend where anything can happen. So just looking at this, which one already feels a bit more you? Okay, so once you've picked a pace, we've got to understand the landscape. I mean, what actually makes these prices go up or down? I promise you, it's not some kind of magic. It's actually one single fundamental force that runs the whole show. And here it is. This is probably the single most important idea in all of trading. Every single little wiggle you see on a chart, every tick up or down, it's all just a battle. It's buyers trying to push the price up and sellers trying to push it down. That's it. That's the engine that drives absolutely everything. This seesaw is the perfect way to picture it, right? When there are way more buyers than sellers, the demand side gets heavy and whoosh, it pushes the price up. When a ton of sellers jump in, the supply side gets heavy and it pushes the price down. The market is just this constant search for balance between those two forces. And if that still feels a little, abstract, let's bring it back to something we all get: shopping. You already understand this. You just might not have thought about it this way. When your favorite brand of something goes on sale, what do? You might buy more of it, right? When the price is low, demand is high. It's the exact same principle in the markets. Now, let's see what this actually looks like on a real chart. See that big, powerful move down? That's the seesaw we were talking about slamming down in real time. That is a visual of sellers just completely overwhelming the buyers, creating this huge tradable drop in price. This isn't just theory. This is the market in action. Okay, so we get the forces that move the market. Now we need to learn how to actually read our map, the price chart itself. We're going to break down the two most basic building blocks you need to know to make sense of all those lines and colors. And I really can't stress this enough. Before you even think about fancy indicators or complicated strategies, you have to learn to read the story that the price is telling you. It's like trying to read a novel without knowing the alphabet. This is the absolute foundation of everything. So each of these little red and green bars is called a candlestick. And each one is like a mini story of the battle between buyers and sellers over a set period of time. The thick part, the body, tells you where the price opened and where it closed. And those little lines sticking out, the wicks, show you the highest and lowest points it reached. Basically, green means the buyers won that round. Red means the sellers won. And just like letters make up words, all these individual candlesticks, when you put them together, start to form the overall structure of the market. And that structure tells us the most important thing of all: which way is the market's story trending? And this right here, this is the cornerstone of reading a chart. It's so simple, but so powerful. In an uptrend, the price makes a new peak, a higher high, then pulls back a little to a higher low, and then pushes up again to an even higher high. It's literally like walking up a flight of stairs. A downtrend is just the opposite, walking down the stairs. Seeing this simple pattern is your first step to making sure you're trading with the market's momentum, not fighting against it. All right, we've talked about our style, we've learned how to read the map, but this next section is without a doubt the most important part of this whole thing. You can have the best analysis in the world, but if you don't get this golden rule, none of it will matter. Just let that one sink in for a second.
This is what every successful trader lives and breathes. Your number one job isn't to make a ton of money. Your number one job is to be a ridiculously good defender of the money you already have. Why? Because without capital, you can't trade. You're out of the game. Amateurs chase profits, pros protect their money. So what does being a good defender actually look like? It looks like this number. This might be the single biggest secret that separates pros from beginners. It means on any single trade, you never ever risk more than 1 to 2% of your total account. So if you have $1,000 in your account, you're only risking $10 to $20 on one idea. That's what keeps you in the game long enough to learn. Think of this as your trading survival kit. First, always use a stop loss. That's an order that automatically gets you out of a trade if it goes against you. It's your safety net, non-negotiable. Second, control your position size. That's just doing the math to make sure your risk actually equals that 1 or 2% we just talked about. Third, you only take trades where what you could win is way bigger than what you could lose. A good starting point is aiming to make at least double what you're risking. And last, and maybe the hardest one, is emotional discipline. You have to stick to your rules no matter what. And there you have it. Your roadmap is complete. We started at the bottom of the mountain, feeling totally overwhelmed. But now you have the foundational pieces to guide you. You know how to pick your pace, understand the landscape, read the map, and you have the golden rule for survival. You are now officially empowered to start this journey. So the journey really does begin right now. Think back to that first turn in the road we talked about, day trading versus swing trading. Which one felt a little more like you? Just taking a moment to think about that question is your very first step forward. Thanks for hanging out with me for this explainer.